futures trading is not as simple as peering into a magic crystal ball, and it can feel a bit overwhelming for beginners. But it is doable with a structured approach. So here's a step-by-step guide on trading futures for beginners. So what are futures? A futures contract is an agreement to buy or sell an asset like gold, oil, or the S&P 500 index at a set price on a future date. Best part, you don't need to own the asset. Most traders use futures to bet on price changes, not to take delivery of barrels of oil or physical gold. In fact, nearly all futures contracts are closed before expiration, so you're just trading price moves. For example, if you think the S&P 500 will rise, buy a futures contract, sell it later for a profit, and never touch the actual stocks. Of course, it's not that simple. Futures trading carries significant risks due to leverage, which can amplify both gains and losses. You could lose more than your initial investment, and markets can be highly volatile. So only trade with money you can afford to lose and fully understand the risks before starting. So why trade futures? Well, futures are flexible. You can trade nearly 24 hours a day, 5 days a week, and use leverage to control large positions with small capital. Leverage means you deposit a fraction, say $1,000, to control a $20,000 contract, but it's a double-edged sword. Gains and losses both grow fast. Futures also let you hedge your stock portfolio and speculate on global markets, so commodities, currencies, stock indexes, and more. Plus, many US futures often get a tax break. 60% of profits are taxed as long-term gains, which are lower rates, even for short-term trades under a year, unlike stocks. So what are the best futures contracts for beginners? Well, micro contracts are great for beginners because they're smaller, requiring less money and lowering risk per trade. For instance, the Micro E-mini S&P 500 tracks the S&P 500 index, 500 top US companies, giving you a slice of the stock market. At 1/10 the size of the standard E-mini, each point move is worth $5, not $50. So a 10-point jump means $50, not $500. Similarly, the Micro E-mini NASDAQ 100 targets tech giants, Micro Gold offers a safe haven commodity, and Micro WTI crude oil taps the energy market. Leverage still applies, so plan trades carefully to limit losses. How to get started trading futures. For safety, start by opening a futures account with a U.S. regulated broker overseen by the Commodity Futures Trading Commission and National Futures Association. Prioritize low fees, an intuitive trading platform, and access to micro contracts. And before risking real money, practice with a demo account. Brokers like Plus 500, NinjaTrader, and Webull offer unlimited virtual money to practice trading futures. When you're ready to trade live, fund your account with only what you can afford to lose. Start with micro contracts like the Micro E-mini S&P 500 or Micro Gold, where price moves are smaller. Again, just $5 per point move versus $50 for standard contracts. Last, always use stop loss orders, which automatically sell your position at a set price to cap losses. Leverage can amplify profits, but also wipe out your account fast, so trade small and stay disciplined. Now, picking a futures trading platform. Your broker choices make or break as a beginner. You want a platform that's simple to use, offers demo trading, and keeps costs low. Plus 500 shines here. Its clean interface is perfect for newcomers, and you could trade micro contracts with access to Forex, crypto, commodities markets, and more. Their demo account with unlimited funds for unlimited practice mimics live markets, letting you build skills risk-free. Meanwhile, Plus 500's Futures Trading Academy offers free videos and guides to help get you up to speed. With a $100 minimum and low fees, 49 cents per side for micro futures, no platform fees, no data fees, it's budget friendly. If you want to dive deeper into futures trading, there's a link in the description that'll take you to Plus 500, the app I've been using throughout this video. That said, Plus 500 prioritizes simplicity over advanced charting. So if you want deeper analysis tools, platforms like NinjaTrader or Interactive Brokers might suit you better later on. Remember, leverage in futures magnifies both gains and losses, so set stop losses and start small. Last, keep learning to improve as a futures trader. Futures markets move fast, so stay sharp. Follow economic news like interest rates or oil reports for market drivers, and use resources like CME's Futures Fundamentals for beginner tips. And keep a trade journal to track wins, losses, and lessons. It's the fastest way to improve. Futures can be powerful, but only if you respect the risks and commit to learning. And as a reminder, if you want to learn more about futures trading, click the link in the description to head over to Plus 500. So which micro contract are you excited to try? Drop it in the comments and let me know why. And if you enjoyed this video, please hit that like button, subscribe for more investing content, and check out my other videos on market news, trading tips, and broker comparisons. And be sure to check out and subscribe to my market briefing newsletter sent out weekdays at Market Open, where we cover the top 3 stories moving the markets.